So good morning, everyone, and welcome back to our weekly webinar series. Today, of course, we are taking up this very interesting topic on what are the difficulties that all resolution professional liquidators are facing when they prepare financial statements for a company which is either under insolvency or under liquidation. And that's a prerequisite that we all know. It's a prerequisite to handing over the balance sheet or handing over the company to the resolution applicant, and that becomes one of the major hurdles for the whole process to go forward sometimes. So over to Anil, sir.
Thank you, Ankit. We welcome all participants in our 68th weekly webinar episode, which is like AAA weekly webinar series. And this subject, in fact, is got different parts. So the one part is that why the books of accounts are required. Second part is why the financial statements are required during the process. Now, the third part is that in case the books of accounts are not available, then what are the obligations on the resolution professional? Third, when the financial statements are not available, what are the obligations on resolution professional? Fourth, the RP is under duty bound to prepare and get the financial statements audited during CIRP. And in case it is a case which is to be kept as a going concern under liquidation, then also the liquidator is supposed to continue with the preparation of financial statements, getting it audited, and also file all kind of compliances, including the submission of all returns before ROC, MCA, and also filing of the income tax returns. However, in case the company is not being kept as a going concern under liquidation and it is being sold in piecemeal or in any other clauses of Regulation 32 of the liquidation process regulations, then the liquidator is not supposed to prepare a financial statement, not supposed to prepare the even get it audited. So coming to all these issues, in fact, our experience of handling various implementations of the resolution plan and the difficulties that the RP is facing while restructuring the books of account and getting the financial statement. This is the trigger, and therefore this kind of deep study was done, and we are presenting this before all of you. So I'm sharing my PowerPoint presentation. So the issues faced by the resolution professional and liquidators. When I say liquidator, it only means that in case the company is being kept as a going concern, being sold as a going concern, and is being transferred to the successful bidder as a going concern. And see, all this is applicable to liquidators only in these three situations. However, for a resolution professional, it is otherwise also important. For the liquidator, the books of accounts are very, very important. See, the books of account are as important as like kind of conducting the liquidation, and it cannot be closed. The liquidation cannot be closed unless the liquidator construct the books of accounts in case it is not available. Now, let us understand first of all, what is the need of books of account during CIRP? And also in between, I will say why it is required during liquidation. Because the liquidation is also, the books of accounts are utmost required during liquidation. And these books of accounts are required up to the date of commencement of CIRP, which has to be taken from the suspended management. And further, it is the obligation of the RP to continue maintenance of the books of account and all compliances. Going forward, let us understand why this is required to maintain the books of account. Because see, the first thing that we would like to say that in case we see section 14 subsection B of the IBC code, so it is the duty of the RP to see transferring, encumbering, alienating, or disposing of by the corporate debtor any of its assets or any legal rights or beneficial interest therein. So for the purpose of knowing assets, for the purpose of knowing any legal rights, for the purpose of knowing any beneficial interest in any kind of property, I would need the help of books of account. the fixed asset register, which is part of the books of account. That is where I would be able to understand whether there is any kind of violation of the moratorium. Then going to section 18, subsection A of the code, which is the duties of the IRP. And the duty of the IRP says that they collect all information relating to assets, finances, and operations of the corporate debtor for determining the financial position. See, when you see the financial position, even the code has defined financial position also. We will come to that definition also, definition of financial position of the corporate debtor, including information relating to business and operation. I need books of account for the last 2 years. Financial and operational payments for the previous 2 years, I need books of account. List of assets and liabilities as on initiation date, I need books of account. Such other matters as may be specified. For this, the duties of the IRP, that I need books of account for determining all these duties, for doing all these duties. Then the section 18 subsection D says, monitor the assets of the corporate debtor and manage its operations until a resolution professional is appointed by the committee of creditors, and the resolution professional also has similar duties. So therefore, IRP or RP, it is the same duty regarding the monitoring of the assets. So unless I have the details of the assets, I will not be able to monitor it. Unless I have the details of all the current assets, I will not be able to monitor it. Unless I have the details of all the refund claims or all the amounts to be claimed from third parties, I would not be able to monitor it. So therefore, the books of accounts are definitely required. Going to section 18, subsection F, it is the duty of the IRP, and finally the RP has to continue this duty to take control and custody of any asset over which the corporate debtor has ownership rights and recorded in the balance sheet. So this is the first time that I am now getting a reference of balance sheet. That means financial statements of the corporate debtor. So I need books of accounts as well as balance sheet, because I have to see whether the balance sheet, whether this kind of asset is recorded in the balance sheet. Now, in some cases, even if I do not have balance sheet, but if it is recorded in the books of account, I will consider that my books of accounts are ultimately the source for preparing a balance sheet. So therefore, I will consider my books of account as if it is appearing in the balance sheet if there is any asset in the books of account of the corporate debtor, or with information utility or depository of securities or any other registry that records the ownership of the assets. So these are the details of various assets that I need to take control and custody. Ownership rights, which may or may not be in the possession of the corporate debtor. Tangible assets, movable or immovable. Intangible assets, including intellectual properties. Securities, including shares held in any subsidiary of the corporate debtor. Financial instruments, insurance policies. Assets subject to determination of ownership by a court, even if the disputed assets. So all this information, what assets I have to take control, what assets I have to take custody, that all would be known to me by the books of account or by the financial statements. Even financial statements are not helpful in understanding the assets, because the financial statements are in groups, and I would be able to know only that in this particular company, the total building value is 300 crore. I would not have any detail whether these are 5 buildings, 4 buildings, or 1 building, and what is the location of the building. That would be available in the fixed asset register, or that some information may be available in books of account, that may be in any kind of software, maybe SAP or maybe Tally. So that again, ledger-wise account would be available. However, the best information would be available in fixed asset register, which is, according to my experience, we haven't got not more than 5-10% of the cases that we have handled. So far, we have handled almost 300 assignments of liquidation, assignments of CIRP and liquidation. But our experience is that not more than even 5-10% cases that we have been able to have access to the fixed asset register of the companies. So therefore, the difficult part for the IRP, for the RP, is to take control and custody, because he doesn't know what are the assets where he will have to take control, and he doesn't know where he has to take the custody. So like in case we see the list, it includes everything. It also includes even disputed assets, tangible assets, intangible assets, which are not even in the possession of the corporate debtor. So all this is very clearly mentioned here, that this is why the books of account are required. And in this case, we also can see that the balance sheet is also required to understand whether the asset is owned as per the balance sheet. So we are continuing with the with that part, well, why the books of accounts are required? Because the duties of the resolution professional in section 25 of the code again says it shall be the duty of the RP to preserve and protect the assets of the corporate debtor, including the continued business operations of the corporate debtor. Take immediate custody and control of all the assets of the corporate debtor, including the business records of the corporate debtor. Business records is also my books of account. So when we say that this RP has the power, IRP has the power, RP has the power under section 25, and the IRP has the power under section 18, subsection F. So the duty has to be complied with. So I definitely need to preserve and protect the assets. I definitely need to take control and custody of all the assets and all business records. So in case the books of accounts are not given to me, my powers are that my duties are that I have to take control and custody of all business records. That's very, very important part. Section 25 subsection A provide a power or a duty on the RP to take immediate control and custody of all the assets. Now again, I'm continuing with the need of books of accounts. When we talk about the need of books of account, then we also say that the books of accounts are required for regulation 35 of the CIRP regulation, where I am also under obligation to determine fair value and liquidation value of the assets of the company. There are three classes of assets. One is the land and building, the other is the plant and machinery, and the third is securities and financial assets. And these are my requirement that if I do not have the details of the assets, if I do not have the details of the plant machinery, if I do not have the details of the current assets, securities and financial assets, I would not be able to get a valuation done. And if the valuation is not done, in case the valuation is not done, the resolution plans cannot be approved, because see, in resolution plan, most of the things are depending upon the liquidation value of the company. Various decisions are depending upon the liquidation value of the company. And in case the books of accounts are not available to me, then the most important part that I would be missing in my execution of responsibilities is I will not be able to find, determine, and file an application before NCLT regarding all avoidance transactions under section 43, 45, 49, 50, and 66. So in case the books of accounts are not available, what I am able to do? I am able to do nothing. So that means the books of accounts are utmost required. Ankit, would you like to add something on this valuation part? So what are your experience in case because you have done hundreds of valuations where the company has gone into CIRP. In case the books of accounts are not available, then how do you do the valuation under the IBC code?
So, with respect to land and building, if there is a physical possession of any land or building or any such asset available with the RP, and there are certain documents that establish the title, we are then able to say that this asset belongs to the company and then value it accordingly, value it based on the physical verification and the records available. Plant and machinery, again, based on the physical inspection, is the only way out in case the FAR is not available or other details are not available. And there again, the valuation report is weak because sometimes even with the physical assets present there, we are not able to make out the from the labels or from the other identification of the plant and machinery, that how old is it, what is the kind of use of this machinery in today's world. So all that, I think, depends on the expertise of the valuer. Then that is taken care of. With respect to securities of financial assets, there again, like in most cases, we find that trade receivables, let's say we are trying to value them. If ledger is not available, if invoices are not available, maybe purchase order is not available, there is no confirmation or document trail available on follow up with the debtor. So in that case, normally we end up valuing them as zero, because then it will be very difficult for us to say that okay, there will be any value which is realizable if we have nothing at all with us. So these are the problems, and I think you're right that this valuation report can be an evidence that everyone might want to consider when they are kind of preparing the books of accounts or preparing the financial statements or maybe auditing them.
So good, Ankit. But then I definitely believe that in case the books of accounts are not available, in case the financial statements are not available, even as a valuer, you also find it difficult to provide a good report. You also find it that the report is compromised in many manners. Is it okay?
We have to take assumptions, and that's, yeah, it is compromised in many aspects. There might be a genuine value in a trade receivable which is not appearing to us because the books are not available.
Now, I'm continuing why the books of accounts and the financial statements are required by the IRP, RP. And then let's see, I'm referring to section 21, subsection 1, where the committee of creditors, like the interim resolution professional, after collation of all claims received against the corporate debtor, will determine the financial position of the corporate debtor. Now, the financial position of the corporate, as far as the financial position is concerned, that is also defined under the code. I will come to that definition, financial position. Now, again, in section 21, subsection 9, the committee of creditors shall have a right to require the resolution professional to furnish the financial information in relation to the corporate debtor at any time during the corporate insolvency resolution professional. So that as I said in earlier, I said that even this financial position is defined, and then even the financial information is also defined under the code. Financial position is defined, financial information is defined. And again, in section 37, subsection 2, power of the liquidator, the creditor may require the liquidator to provide them any financial information relating to the corporate debtor. I'm only trying to say again and again that this the RP requires all this information. Now, let us see what is the definition of financial information. This is provided in section 3, subsection 13 of the code. In relation to a person means one or more of the following categories of information, namely records of the debt of a person, records of liabilities when the person is solvent, records of assets of person over which security interest has been created, records, if any, of instances of default by person against any debt, records of balance sheet and cash flow statements. Records of balance sheet and cash flow statement. So that means to say that the financial information can be asked by the committee of creditors. And when we actually go to the committee of creditors that we want to appoint an accountant, we want to appoint an auditor for preparing the financial statements, cash flow statements, most of the time the committee will say that why we are spending money on this. So this is the reason that we are insisting that this should be prepared and this should be done. Then again, section 5, subsection 9 actually defines financial position in relation to any person means financial information of a person as on a particular date. So financial information and financial position both are defined in the code. And in case you see this A, B, C, D, E, F, this is almost everything about a company which can be asked from you by the committee of creditors. And that is the same committee of creditors. Normally they decline to appoint an auditor, decline to appoint an accountant, decline to make an effort on restructuring of the books of account because of the CIRP cost. But then as the law has been structured in this manner, that it is the duty of the IRP, RP, and also liquidator in case the company is being kept as a going concern to continue with the books of accounts, and also to prepare financial statement, and also to file all the ROC returns, and also to file all the income tax returns, and also comply with all other laws like the Provident Fund, ESI, everything. Now, again, I'm continuing with the books of account. Why the preparation of books of account is required? Because it is required for preparation of information memorandum under section 29 of the IBC. The resolution professional shall prepare an information memorandum in the form and manner containing such relevant information. Now that relevant information is defined in the regulations. Relevant information means information required by the resolution applicant to make a resolution plan for the corporate debtor, which shall include the financial position. Now again, financial position, because in information memorandum also require financial position of the corporate debtor and information related to disputes by or against the corporate debtor and any other matter pertaining to the corporate debtor as may be specified. And then in case we go to regulation 36 of CIRP regulations, where some part of the information, I'm not presenting the entire requirement of information memorandum, only that part. I'm only saying that the information memorandum includes relevant information, including its operations and financial statements. I am to include the latest annual financial statements. I am to include audited financial statements of the corporate debtor for the last 2 financial years and provisional financial statement for the current financial year made up to a date not earlier than 14 days from the date of application. Now, this date of application, I'm not sure what this date of application is. To my understanding, this date of application is that when I actually ask my resolution applicants to give me a to or provide me the resolution plan. I can't see that in information memorandum, the date of application of filing the application under section 7, 9 or 10, that is relevant. Information memorandum is being prepared by the RP. Information memorandum is not prepared by the suspended management. Information memorandum is required for submission of resolution plan. Information memorandum is required up-to-date information so that the same would be considered by the resolution applicant. So it is not possible that this date can be the date related to the application under section 7, 9 and 10, because there may be 2 years, there may be 3 years, which is where the application was pending. So this I am considering that the provisional balance sheet is required. Provisional balance sheet is required, although it needs clarification from the code, like what date it is. I definitely could not understand that this date relates to the application under section 7, 9, 10. Going forward, the information memorandum to include details of business evaluation in industry overview and key growth driver in case of corporate debtor having book value of total assets exceeding 100 crore. So in case I do not have the books of account, in case I do not have the financial statements, I will not be able to determine whether the total assets exceeds 100 crore or not, as per the last available financial statements. Okay, so going forward, regulation 36 capital C of the CIRP regulations also, it again relates to that 100 crore of the assets. Now, the revised Form G again provides in row 8 that along with Form G, the last available financial statements with schedules of 2 years, list of creditors, relevant dates of subsequent events of the process are available. That is required even for releasing Form G in the newspaper. Going forward, Regulation 8, Sub-Regulation 2 of CIRP regulation says, like for the verification of claims, I also need the financial contract supported by financial statements showing that the debt has not been paid. All this, probably this is required from the claimant side, but yes, now we have established fully, Ankit, we have established fully that the books of account and financial statements are required. And in case this is not available, then probably the RP or the IRP would not be able to conduct the process. Now, we can see at what extent it would be available, at what extent it can be available. So then now we will go, like in case the books of accounts are not available, then what the RP is supposed to do. In case the financial statements are not available, then what the RP is supposed to do. What is expected out of RP. But I think before we go ahead, we can take some of the questions, Ankit.
So, Srinivasa Sarma Detaji is asking that quoting section 18A, if the suspended management gives only financials 2 years prior to CRP, is it okay?
No, I see, like it is not okay. We need to ask for the updated books of account. In case the books of accounts are available, then the RP need to get these books of accounts completed and get these financial statements made. In case the books of accounts are also not given, then the RP is also expected to restructure the books of account and make the books of account.
I think the query is that the RP is getting the audited financial statements from the management, but they're not getting the books behind that audited financial statements. That's the query here from Srinivasa.
Then how the avoidance transactions audit would be conducted? That actually would not be conducted then in that case.
Yeah, so that would be the limitation there. But today's, like, if we talk about the balance sheet and the compliances for any resolution applicant to take over, maybe this will not become a hurdle for that purpose, but it will definitely become a hurdle for preparation of the balance sheet in future. Because when we prepare any balance sheet in future, we do want the trial balance for the recently audited financials. Then, of course, many corporates don't have a fixed asset register. How do we manage that situation? So that's a question that is a very common question. So I believe that the physical verification of assets, listing down the assets based on the know-how available, asking creditors in case they have any available list of information that can help in reconstruction of the FAR, trying to understand if there is any spike or any rather peaks or spikes in the capitalization of assets in the recent past, or rather, that can help. If you get access to the income tax portal, you can get access to the last many years of ITRs. I think starting from 2006-7, everything is digitalized. So there again, you can try and find out in case the fixed asset schedule there gives you a basic idea of the additions in various heads. Tax audit reports can have a list of additions of assets. This is what I can think of. Then, of course, we are looking at, I'll just see in case. So Regulation 36C, audited financial statements of the corporate debtor for the last 2 financial years. I think that's again, I think we can continue.
Okay, so now, see, we have seen one part of the presentation today, that why the books of accounts and financial statements are required. And we have almost established that without books of account and without financial statements, it is not possible to conduct process. Now let us understand what are the powers of the RP or IRP to access books of accounts and records and other documents. So first of all, we can actually refer to section 17, subsection 2, clause D, where the powers have been given to the RP to access the books of accounts of the corporate debtor or other records available with the government authorities, statutory auditors, accountants, and such other person as may be specified. So this is one power where the actually RP can reach out to the accountants and statutory auditors and the government authorities wherever he feels that such information would be available. Then the RP has the power to seek access from the government authorities if the books are available with them, maybe on account of any kind of search and seizure, survey, raid, confiscation, attachment, etc. In fact, recently we have been able to get the copies of the records confiscated or seized by the CBI in some cases, and those are really helpful. Then the RP has the power to seek books of accounts from the statutory auditors or tax auditors or accounting firms if engaged by the corporate debtor. Recently, the Institute of Chartered Accountants of India has released audit working paper templates. And this is a very, very recent publication released in June 23, and the auditors are required to retain the audit working papers. Now, the audit working papers are not something which can be considered as a record of the corporate debtor. This is a record of the auditor. Now, this record, all the RPs are supposed to ask from the statutory auditors that whatever audit working papers that you have kept while you verified the books of account, please share with us as per the powers given in section 17, subsection 2, clause D. Now, the officials of corporate debtor are under obligation to deliver all books and papers in his control or custody belonging to the corporate debtor. Why I'm saying so, the officials of the corporate debtor are under obligation? Because it is mentioned in section 70. I will come down to that, because the official, now we will see who are the officials. We will see who are the key managerial personas, because that's something which requires a clarity. Who are those people against whom we actually can move an application under section 19.2. We can move an application under section 18, subsection F, we can move an application under section 25 subsection A. We can move an application also under regulation 30 of the CIRP regulations and seek district authorities help or police help. Now we can say the regulation 4 of the CIRP regulation actually talks about the access to books of account, and in this case the IRP has been given power to access all the records and the information available with the depositories of the securities, professional advisors of the corporate debtor, information utilities, other registries that record the ownership of assets, including the registrar of documents, members, promoters, partners, board of directors, and joint venture partners of the corporate debtor, contractual counterparties of the corporate debtor. They are all under obligation to share this information, and the RP has the access of that information. Now, again, the regulation 4 says the access to books of account. The sub-regulation 2 says the personnel of the corporate debtor. Now, when the personnel word is written here, we will now decide about who are the personnel of the corporate debtor in the next coming slides. Its promoters, any other person associated with the management of the CD shall provide information within such time and in such format as sought by the IRP or the RP, as the case may be. Regulation 4, sub-regulation 3 further says that the creditors shall provide to IRP or the IRP RP, as the case may be, the information in respect of the assets and liabilities of the corporate debtor from the last valuation report, stock statement, receivable statement, inspection reports of the properties, audit report, stock audit report, title search report, technical officer's report, bank account statement, and such other information which shall assist the IRP or the RP in preparing the information memorandum, getting valuation determined, and in conducting the corporate insolvency resolution process. It is very well said in regulation 4 of sub-regulation 3 that even the creditors are also supposed to give this, and it is mentioned here so that the IRP, so that the RP conducts the process. So all these things we can ask from the, I'm only talking about the powers of the RP to seek information. So we have seen various powers. We have seen the powers that we can access the information from the government authorities. We have seen that we can seek it from the auditors, accountants. We can seek from the depositories. We can seek from the registrars. We can seek from the even the creditors, the lenders. Now coming to the other power, like when we were talking about the officials, and the officials were in fact defined in the section 5 subsection 19 of the code. Officer for the purpose of section chapter 6 or chapter 7 of this part means an officer who is in default as defined in clause 60 of subsection 2 of the Companies Act, or a designated partner as defined in clause J of section 2 of the Limited Liability Partnership Act, as the case may be. So now let us see what the section 2 subsection 60 of the Companies Act says. Section 2 of subsection 60 of the Companies Act says that the officer who is in default. So the officer who is in default then finally is called as an officer. So the definition now includes the whole-time director, key managerial personnel, and where there is no key managerial personnel, such director or directors as specified in the board in this behalf, and who has or have been his or their consent in writing to the board to such specifications. Any person who, under the immediate authority of the board or any key managerial person, is charged with any responsibility, including maintenance, filing, or distribution of accounts or records, authorizes, actively participates in, knowingly permits, or knowingly fails to take active steps to prevent any default. Any person in accordance with whose advice, this is also very important. This is basically almost lifting the corporate veil. Any person in accordance with whose advice, directions, or instructions the board of directors of the company is accustomed to act, other than persons like gives advice to board in a professional capacity. Every director, in respect of a contravention of any provisions of the Act, who is aware of such contravention by virtue of receipt. So these are all various kinds of officers. Now, after the officers, we actually have to see what is the key managerial personnel which are defined in section 2, subsection 1. So it states that the CEO of the company, chief executive officer, manager, managing director, company secretary, whole-time director, chief financial officer, such other officers designated by the board as KMP but are not more than one level below the directors in the whole-time employment. Such other officer as may be prescribed. And of course, for the limited liability partners, it is provided in Section 7 of the Limited Liability Partnership Act that whatever is provided in Section 7, those are the people who are responsible. So let us try to understand now who are the persons responsible for providing the books of account. The whole-time directors, the CEO, CFO, manager, managing director, company secretary, whole-time director. So all these people, like in case you can understand, so everyone is required to provide the information to the RP. So we can make, first of all, we should find the list of such people who are officials of the company. Then we should proceed against them that these are the officials of the company. So therefore, they are supposed to provide the information to us. Now, in Section 70 of the code, it is provided, this is an offense which is provided as punishment for misconduct in the course of CIRP. Now, Section 70, subsection 1 says, on or after the insolvency commencement date, where an officer of the corporate debtor does not deliver to the resolution professional all books and papers in his control or custody belonging to the corporate debtor and which he is required to deliver, prevent the production of any book or paper affecting or relating to the property or affairs of the corporate debtor, he shall be punishable with imprisonment for a term which shall not be less than 3 years, but which may extend to 5 years, or with fine, which shall not be less than 1 lakh rupees, but may extend to 1 crore of rupees. So in case the RP is not getting books of account, or somebody who is preventing the production of any books of account, that means that that person can be called as an official, because see, this is again that any official actually can be brought into this official that we have seen the definition in Section 2, subsection 61, 2, subsection 51. So all these are officials, and we can make them as party for this kind of prosecution. And this kind of prosecution can be tried under Section 236 of the IBC, where the power lies with the IBBI for the time being, and the RP can report to IBBI that such kind of information is not being provided, and it's a contravention of Section 70 of the IBC. Therefore, the prosecution may be launched. Now, another set of efforts that the RP can make, RP can file an application under Section 18, subsection F, under Section 18, subsection F, which says that the IRP shall perform the following duties: take control and custody of any asset over which the corporate debtor has ownership right, as recorded in the balance sheet of the corporate debtor, or with information utility or depository of securities, or any other registry that records the ownership of the asset. Similarly, we have also seen when a person becomes RP, then that power comes from Section 25, subsection A. So Section 18F is for IRP, Section 25A is for the RP. And then with this, we also have Section 19, subsection 2, where any personnel of the corporate debtor, its promoter, or any other person required to assist or cooperate with the IRP does not assist or cooperate, the interim resolution process make an application to the adjudicating authority. So first is Section 19(2) application, and we can file this against all the officials of the company. We have already said before. Then is the Regulation 30. The interim resolution professional or RP, as the case may be, may make an application to the adjudicating authority for an order seeking assistance of the local district administration in discharging his duties under the code or these regulations. So therefore, we can say that the IRP can file an application under Section 18, subsection F, read with Regulation 30. RP can file an application under Section 25, subsection A, read with the Regulation 30 of the CIRP regulations. NCLT will pass an order, give directions to the district administration. District administration will provide us the police help, and the police can go along with the RP to take the control and custody of the assets or records of the corporate debtor. Records include books of account. Now, we have what we have done so far, why the books of accounts and why the balance sheets are required. Without these two things, it is very difficult to conduct the process. Then we have discussed what are the efforts that the RP can make for accessing the information, seeking it from the government authorities, seeking it from the GST department, income tax department, statutory auditors, accountants, and the tax auditors. All this can be sought, or even from RERA in some cases, all this information can be sought. Then comes is the what are the powers, under what kind of applications can be submitted to adjudicating authority, what kind of directions can be taken under section 19 subsection 2, or under section 18 subsection F, or under section 25 subsection A, or under regulation 30 of the CIRP regulations. So these are all very, very important steps that the RP can take for seeking information, because the information is required. Otherwise, the process would not be conducted. Therefore, all these efforts must start immediately on appointment of the IRP. Now, we actually have to see, like in case after all the efforts, there are many cases where the books of accounts are not available, the access is not given, the balance sheets, financial statements are not delivered, whatever is available in the public domain, beyond that, it is not available to the RP. Then, what are the options with the RP? What are the obligations of the RP? I think I can continue, and then later on we can take the questions, Ankit, because this is very important that we actually should say. Now, in case this is not available, then first of all, RP need to get the books of accounts updated to the extent practically possible. NCLT is expecting this to be done by the RP, and NCLT is thinking that the RPs are not doing it after filing an application under section 19(2). RP are just sleeping. Now, the RP can obtain bank statements from all the bank accounts, from all the banks. Now, the question is, how do RP come to know how many bank accounts are maintained by the company? So yes, there are some efforts which can be made. Accounting firm can be appointed with the approval of the committee of creditors. Some details of the bank accounts and the transactions may be available. In case we can access the 26 AS of that particular company, and that is tax credit statement. We can also access in annual information statement on the income tax portal. We can also access taxpayers information summary from income tax portal, and copies of the income tax returns also can be downloaded from the income tax portal. The only thing that we require for this is that it is required that the PAN card is required to be submitted. A copy of the PAN card is required to be submitted, and also that you are appointed as the IRP or the RP, that document is submitted. Then the income tax department will give you the access of that particular company, and you can search the portal and you can find all this information that I said just now. Now, also, some of the informations can be sought from the third parties like statutory auditors, tax auditors, consultants. Income tax authorities can also be reached for the information by saying that the RP is empowered and you are under obligation to provide this information. And in case they are not agreeing, then you can actually use the RTI law for seeking that information. Now, we have also seen that the financial creditors who have given loan to the company, they are also under obligation to provide that information to the RP. GST number can be taken from a website called www.tickshare.com. Simply type the name of a particular company or a similar name, then you will actually get a lot of options, and you can choose your company, and you will actually get immediately the GST number, in how many states this company has the GST number is registered. That information will immediately come to you, and once the GST number comes to you, you can also extract PAN out of the GST number. Then comes is the PAN is part of the GST number. As I said, the copies of the GST returns can be obtained from the GST officials. If not given, then RTI can be used. Copies of the documents submitted before RERA can also be sought from the RERA officials, and again RTI can be used in case it is not provided. Now, all this information collection finally will lead to restructuring of books of accounts. First of all, we have seen how it is important. Then secondly, we have seen how it can be collected. And the third part is that in case it is absolutely not possible, then what should be done? Then we have to restructure the books of account. we have to get the bank statements of all the bank accounts. We can even get the details of the bank statements from the income tax department. In case you have any friend in banking industry, they actually can provide you that statement that on how many bank accounts are on this PAN number. If there are bankers, they can actually, I think they have the access to the information that how many bank accounts are available on this PAN number. However, the whatever information is provided in bank statements, bank account statements, that is not really fully complete information. That's not even identifiable transactions. Because see, in some cases, only transferring bank may be written or only the source of the transferring bank is given. Now, when we talk about the receipts in a bank account statement, that receipts can be sale of goods or services. That receipt can be receipt from debtors, receipt from advances, loans received, sale of other current assets, sale of investments, sale of capital assets, refund from any tax authorities or refund from suppliers, payment against claims, including insurance claims, refund of loans given to staff or any other thing. So when I see receipt in the bank statement, how do I estimate or guesstimate that these receipts will belong to these kind of, the nature of transaction is not known, the nature of receipt is not known, although NCLT is expecting the RPs to do this restructuring, but the restructuring will be very, very kind of incomplete, incorrect. Then even in case we talk about the payments, and then we are only understanding from the bank account statement that the 1 lakh of rupees has been made as paid to someone, and that can be payment for goods or services, that can be payment to creditors, operational creditors, payment of taxes, payment against purchase of investments, purchase of other current assets, purchase of capital assets, refund of customers, claim, insurance premium. So all these are the nature of the transaction that is not known when I only get the bank statements. However, these are the various things that the statements are required, the financial statements are required, the books of accounts are supposed to be structured. Now, in case the books of accounts are available, or even the books of accounts are not available, once the books of accounts are made, then the financial statements has to be made. It is under obligation of the RP that the financial statement has to be made. So therefore, the RP is required to make the financial statements and appoint an auditor for the audit of the same. So what I'm only trying to say out of my experience that all the financial statements should be made by the RP in the current dates. No effort should be made to make it in the back date. RP also need to sign the balance sheets, because who will sign? The directors, either they are not available or their powers are suspended. So they can't sign that balance sheet. It is only the RP who has to sign the balance sheet, and RP is also protected in case all the good work is done under good faith. Under section 233, RP is protected. So there should not be any fear to the RP for not signing the balance sheet. They should be comfortably signing. Of course, there are disclaimers that they can give. So going forward, when we talk about the auditors auditing the financial statements at the instance of the RP, so the auditors I have seen the auditors are saying that they will provide for the bad debts because there are many debtors which are time barred. The auditors might even say that they would like to write off all those assets which are not physically available as per your control and custody report, as per your valuation report, because the valuers are also physically verified. How can I sign the balance sheet when there is no asset and you are still continuing with those assets in the financial statements, in the books of account? Auditors may insist that they want to reconcile the liabilities with the claims filed and admitted. They may insist that the bringing in inventory levels they want to bring to the actual level, which is determined out of the physical inventory, physical control and custody, or even the valuation by the registered valuer. They may insist that we have the valuation report on record and the value of the assets have impaired. So they may like to go ahead for the provision for the impairment. They also would like to get third-party confirmation from the payable, receivable, advances, investment, and they in case the liabilities. Now the question is, all these are the demands from the statutory auditors, because they are saying that this is my duty to bring the balance sheet to the closest to the actual. Now, in case we do that, in case we write off some of the liabilities during CIRP, then section 41 subsection 1 triggers of the Income Tax Act, and that actually will become my income during the income during the CIRP period. And any income during the CIRP period, there will be a tax assessment. On that tax assessment, we can't say that you file your claim. That actually will become CIRP cost. So therefore, no write-off under section 41 subsection 1 or under section 28 subsection 4 of the Income Tax Act can be done during CIRP period. However, I have seen in section 28 subsection, in section 41 subsection 1, even if the liabilities are written off before the CIRP period, even unilaterally, even without any kind of order, even without the approval of the resolution plan, that is something which is accepted by section 41 subsection 1. So in case we find that the company is heavily being taxed under section 41 subsection 1, then we can, even if the balance sheets are pending, if the financial statements are pending, in income tax returns are pending, then we can even do that write-off before the commencement of CIRP. Before the commencement of CIRP, we can do that. So Ankit, going forward, the auditors are also saying that after doing all this, when we are not allowing them to do this, we are also not allowing them to write down assets, because we are saying that we will write down the assets, we will write off the assets when the section 41 subsection 1 or section 28 subsection 4 profit will come. So they are now insisting that in that scenario, they will say that the financial statements are not providing true and fair view. They might even say that we are not able to give an opinion on the financial statements, or they might even say that these balance sheets are prepared under special circumstances. So these are the options available with the auditors. But however, when we say that the balance sheets are not providing true and fair, that is the most unavoidable. That is most avoidable scenario. We should not get a report from the auditor that the financial statements are not providing true and fair view. We can accept balance sheets are providing true and fair view subject to qualification. We can accept that these financial statements are made under special circumstances. But the two things, that the balance sheet and the financial statements are not providing true and fair view, and also the balance sheet, we are not able to provide a view on the balance sheet. So these two are not acceptable by under the Companies Act, because if a balance sheet is submitted to ROC, which is with the report that the financial statements are not providing true and fair view, then the directors are supposed to be penalized by under the Companies Act. Since now the balance sheets are being made by the RP, there are possibilities that the RP also may be proceeded against, that how you made these balance sheets. So RP also cannot say that it was in good faith. RP also cannot say that it was done only because of the tax impact. So this is something which is a crucial part of the decision which has to be taken. So therefore, RP has to be very, very careful when signing a balance sheet, and also getting a report from the auditors like this. Two reports are accepted. One, the report which says that the true and fair view subject to qualifications and observation. Second, clean, true and fair view. Third, the balance sheets are prepared under special circumstances. But the other two views, that it is we are not able to provide an opinion, and the true not a true and fair view, these are not acceptable. So one has to be very, very careful, because we have already said that in the section 41 subsection 1 there is a clause which says even if the liabilities are written down unilaterally, and that can be done before the CIRP started, that would be really advisable, so that the tax obligation under section 41 subsection 1 should not come on the successful resolution applicant. It should not come as a CIRP cost. So therefore, this is something which we have found as one solution which can actually provide some relief. We also went and saw the section 129 of the Companies Act, which says that the financial statement shall be same as have been adopted for the purpose of the preparing. The balance sheets are supposed to be prepared under section 129 of the Companies Act, and also as per the accounting standards notified under section 133 of the Companies Act. Going forward, Ankit, all this is what I wanted to say. And now we can actually now take some questions in case the time permits, because we still have 2 minutes, but then we can extend it by 5 minutes and take some questions. I can see there are still 28 questions pending. Yes, Ankit.
So one of the questions is that in what circumstances should a liquidator prepare these books of accounts when maybe during the CRP the books of accounts have not been prepared? So in what circumstances do we feel the liquidator requires the books of accounts and the balance sheets to be prepared?
It is provided in the liquidation process regulations that the primary duty of the liquidator is to complete the books of account. Because unless the books of accounts are completed, the asset memorandum cannot be prepared. And unless the asset memorandum is prepared, the company cannot be dissolved, because while dissolving the company, the NCLT will ask from you the asset memorandum as per the books of account, what are the recoverables. So the books of accounts are the utmost requirement of the liquidator. It is provided in the liquidation process regulations.
So in case say there's 8 years of books of accounts that are not available, not found. So the liquidator is compulsorily required to do that. He can't trust the physical assets available, the record available in some other ways. Maybe the creditors have given him some information of certain assets that are with the company. And of course, if a person makes efforts and finds nothing, then can't he just say that, okay, the 8-year books of accounts are not available. This is the only bank account that is available. These are the efforts that I have made. And there's nothing in this company to make books of accounts for.
So now let us try to understand what are the circumstances. The circumstances is that in case the company is not being kept as a going concern, not being sold as a going concern during liquidation process, then these books of accounts are only required for selling the assets, and also for submission of the asset memorandum, and also for submitting an application for dissolution of the company. So under these circumstances, the liquidator can explain that these are the circumstances that I actually went through, and I tried my best. I also sought bank statements from the banks, and I also tried to restructure. However, I could not understand the nature of the transactions. I could only understand the receipts and payment, and also the transactions with the related parties. But I couldn't do that. Therefore, the NCLT will exempt it. That's the only option. But the liquidator cannot decide himself, like the liquidator, because at the time of the dissolution, the bank, definitely the NCLT will ask about the asset memorandum and how the entire asset memorandum was made and how it was finally disposed of.
Shiv Nandan Sharma ji is asking that what can be done with respect to the EOW's office and in ED's office, and what kind of information can be asked from them. I think you can share your own experience with these two offices
So we have
and how you have been able to get information from them and what is the approach taken.
So we have taken the information from ED offices. Also, there's a lot of follow-up required. A lot of local lawyers are required, and they can keep reaching out. But they are not saying no. It is only time-consuming. CBI, SFIO, and also the ED, wherever they have attached the records, they are open to give it to the RPs or the liquidator. It is only the efforts which are required. They are not saying no. They have never said no. Yes, Ankit.
Then everyone is of course asking you to repeat the website to get details from for the GST. I think that was TIC 50, something like that.
TIC share, TIK, and then share, SHARE.com. TICshare.com.
So Shiv Nandan ji is also asking that if there is a survey, let's say an income tax survey or a GST survey, can we ask for the record of that record from the survey or information collected during the survey?
Yes, absolutely yes. The income tax authorities are under obligation to provide all these records to RP and the liquidator. 100% yes. In case they don't do that, then NCLT application or RTI.
Can IBBI help for Section 70 application? And how do you take that help? That's the question.
Of late, I have seen, initially I submitted various applications under Section 236, which are considered to be a report submitted by the RP to IBBI for commencing the prosecution activities against any erring people who have done any offense. Originally, there were many prosecutions launched by the prosecution department of IBBI, but later on, I could see that they are also resisting now, because the special courts constituted under the Companies Act, those courts are very busy, and apparently whatever applications have been filed against the promoters or any other person, those are not really helping. Very recently, our own case, our own lawyers, they argued, and the NCLT has also passed an order that how the GST department conduct a search and seizure during CIRP, and the officials of the GST department were penalized by 50,000 rupees. And also it was suggested to the RP that since it is a contravention of moratorium and the under section 236, the matter may be reported to IBBI for prosecuting those officials who conducted the search and seizure during CIRP. It's a very, very good judgment from Kochi NCLT. Yes, Ankit, please.
So then, of course, we are getting a feedback that one of the ways of not writing off assets is making provisions for write-offs. So whenever that is possible, then that will basically, of course, reduce the balance in the balance sheet, but it is not really claimed in the income tax return as a loss.
According to my understanding, provisions for bad debt, it is an expenditure which is admitted under the Income Tax Act.
Debt written off is admitted. Bad debt written off is admitted. Provision of bad debts is
bad
not.
debt is admitted in case we try to create a provision for bad debt that is admitted under the Income Tax Act, and later on you can't reverse it, because see, once you say that and your return is already delayed, so that loss is also will not be allowed to be carried forward.
Discuss that, but then in my opinion, writing off a bad debt and bad debt written off and provision for bad debts can have different treatments under income tax. I would second what one of the members saying that might be possible.
It might be possible that there is a difference in the provision and difference in the bad debt.
There is a difference in the provision and the bad debt, so that is a possibility. And similarly, whenever we are writing off assets, let's say we say that the plant and machinery is not available or it is not usable, we can always create a provision for impairment which is not allowable under the Income Tax Act. So that is a possibility of kind of making a balance sheet which is compliant with the standards and also allows you to carry forward those losses.
Everyone is finding ways and means, because see, our objective is to surface some of the difficulties which are faced by the RPs and the auditors.
Yeah.
Everyone is trying to find out some kind of practical ways, and which actually is not really appropriate for me to discuss. And for me, I am only discussing the kind of easily acceptable practical approaches.
Yeah.
So this is what we are doing.
So last question, I think after that we are anyways beating the time. So in the recent colloquium that we attended with respect to the real estate cases, one of the feedbacks given by various NCLT members was that instead of giving a 19(2) application, you give us an application seeking assistance of the DM's office. So I think
I said that section 18F, section 25, subsection A, read with the regulation 30 of the CIRP regulation. We have done that, and we have got the directions to the district administrator. We have gone to the police with that order, and police is ready to help.
So there the question was that what kind of help with respect to books of accounts and financial statements do you think that can be practically possible with that process?
I think the one is the taking control and custody on the assets. Like we normally do it every day under SURFACE. So that is practically possible in case we seek the district authorities, district administration. Then the district administration, the police can also tell the promoter that you provide us the books of account. Let the promoter say on record that I will not provide or I do not have. Let them say that.
Okay, so I think that I've tried to take as many questions and the variety of questions that was of course on this topic, and from the number of questions we can I think easily make out that more than 50 questions. So I think this is a real pain point for all resolution professionals and liquidators. So I think this webinar will certainly help all of us in kind of I think doing this in a better way and trying to find out solutions to the problems. I think sometimes there was this old story where you would follow breadcrumbs and try to find your destination. So I think these are all breadcrumbs, and the more you have, the more are the chances to find the assets, find the books of accounts, and so on. So thank you, everyone. Thank you for your patient listening and your active rather participation in this one.
So see, in the next on the next Saturday, we are coming up with an analysis of a judgment where the rainbow paper judgment has been totally diluted. So now, in case the NCLT tells you that your resolution plan is not compliant to rainbow paper, we can show that judgment. So various resolution plans which are stuck up, that we are coming up in the next Saturday, coming Saturday at at kind of because the next Saturday is on 5th of that is on 5th. So I would be at Singapore attending the Institute of Chartered Accountants event on IBC, but I will take time out of that event and I will start it at 11 Indian time. So please, looking forward to see all of you. Thank you very much. Thanks a lot.
Thank you all.